think with our next presenter, we don't need to introduce them much. They are our good friends. They've been our friends for quite a long time. According to your program, Simon was supposed to present, but then he said he's even got a better person than himself who can do that. So the gentleman here is George Oyuga. He's a general manager of Enwealth, and you could see from their boards here everything that they do. It's a financial services company, and as I've said, they've been our partners for a while. We've been with them in all our pensions events, even previously. Zambia, Victoria Falls. Simon was speaking there, I think last year, or last year but one. Last year. Yeah. So they are our good friends. George will take us through some of the key issues that COVID has brought that has relevance to the pensions industry. And I think, George, you could do a brief introduction of yourself. Maybe you could do a better job than me. Okay, welcome.
Thank you very much, Steve. I think you pretty much covered it. My name is George Oyuga. I'm the General Manager at Enwealth Financial Services Limited. So just in case maybe you've not interacted with Enwealth, we are a licensed pension administrator in Kenya, and we do pension administration amidst other things that we also do to at least expand our bouquet of solutions. What has brought us this far is the vision that we have in terms of building a lifetime of financial well-being and dignity among all members, stakeholders, and everyone else who interacts with our brand. And this we are capable of doing through our mission, which is empowering people through different things in our innovative initiatives around our financial services solutions. So trust is key for us. Excellence is what we quote on every service we give, and our employees and other people who are part of the Enwealth fraternity love what they do. That is covered under our FAN network, and innovation helps us drive the agenda going forward as we also help move the industry forward. We've been in operation for 9 years now, and we currently have offices in 3 countries, Kenya, Uganda, and Mauritius, and with a staff contingent, a lean one, but very effective, of around 40 staff, and covering around 620 million USD in assets under administration within a span of membership of around 50,000. Yeah, so with that, ladies and gentlemen, allow me to also just briefly mention the products that we offer. We have Kesho Hela Income Drawdown Fund, a new payout strategy within the pension space. We have Enwealth Personal Pension Scheme. We have Enwealth Diaspora and Expatriates Fund, as well as an umbrella fund, which we use together with the ANAYA Post-Retirement Healthcare Fund. So I had mentioned that we are registered as a fund administrator within Kenya, that's by RBA. So we offer retirement benefit administration services, retirement benefits consulting services, as well as training. And then we recently also opened an insurance brokerage wing to also try and expand the scope of our services to our clientele. Yeah, so that's the wide range of some of the clients that we service within this economy. But this morning, ladies and gentlemen, those who are joining us, who've joined us physically, and also those who are joining us virtually, my role here is to speak around the title of Post-COVID-19 Benefits, Designs, Innovation, Opportunities. And with that then, of course, key to note is the fact that We are indeed living in unprecedented times due to the impact of COVID-19 pandemic. It is true that as soon as it was evident that it is here in Africa, it has arrived, it has landed, it threw all of us into confusion because we had not foreseen its coming. We had not prepared adequately. A couple of things happened such that economy already rolled into a struggle mode. Businesses were struggling, others were shutting down, employees were impacted, some of them laid off, others had their salaries reduced, others had their contracts amended, simply because of the fear of the employers being able to sustain what was forthcoming. So we also had issues where even the regulator was approached with a request to allow the suspension of contributions at some point. And when we look at all these things and the way they were happening, part of the questions then that come to mind is, where then is the silver lining within this dark cloud? So my role this morning will be to try and trace round that cloud along that silver lining and try to just present the positive side of what we are happening. And this will be within the topic of the day. And I'll cover it in two areas. One is to assess and just highlight the impact of digital transformation in pension administration. And then later on, move on to also look at the drivers of change and product innovation opportunities that then this current scenario presents to us. So to begin with the impact of digital transformation in pension administration, one of the key things we may want to ask ourselves is how can digital transformation help us in moving the needle towards a more holistic view of pensions? And the first thing that comes to mind is the use of advanced technologies. Indeed, looking at the history of the funds that we have, most of them transitioned from DB schemes into DC schemes, and there were actuarial processes involved there. And of course, the actuaries in the house, not to mention by name, will agree with me that the complexity of all those calculations and the approaches that they would use for valuations and the like were indeed tedious and very lengthy. But when technology has now knocked our doors, one of the things that then now presents itself for us to embrace is artificial intelligence, including machine learning. And the results around this would be awesome in terms of real-time actuarial dashboards that can then help with proactive decision making. On the financial side, there were complex financial models that then we would be able to assess the viability of certain measures that we'd want to assess within given funds. And even that, again, right now, when you look at it with that from a positive perspective, we see a presentation through the technological intervention of data-driven financial models. And this also is expected to deliver experience within virtual realities that then we can be able to then pick up and move on. So the traditional ledgers would maintain in big funds and the like. You see, the bigger the fund, the more complex such things were within the older realm. As we transition then, we are looking at opportunities to look at, are we able to onboard opportunities within blockchain technology, where we have distributed ledgers that then are able to sit within different spaces and be able to be accessed almost everywhere. So what we therefore see is that one is a reduced timeline in terms of when people or members expect to be paid, immediate settlement of their dues and the like, and also the STPs, the straight through processing, which then are things that we can be able to explore. So as I highlight all these, I think the question in your mind, if you're managing a pension fund or administering one, is to ask within your service provision, what in all this have you been able to tap in, or what are you already aligning yourself to? Because based on the topic we have today, post-COVID means the future, is it? everything after COVID. Of course, COVID now is almost behind us. We still see it somewhere close here, but we are slowly pushing it behind us. So post-COVID means into the future. So into the future, what have you embraced? How are you aligning your budgets? How are you aligning your technological advancements and incorporation into the things that we do to be able to inform your service provision? So the old is gone, let me say so, by faith. Yeah, and with technology, we can surely say that in as much as the cloud was very dark, that silver lining points us to a more efficient future, a more leaner workforce, to be able to then propel people to also think beyond many of the things that we do manually and also within the tiresome procedures that we've been having. So traditional business models, of course, as we say, are evolving, and they'll only evolve if we are able to embrace change and embrace change positively. However, if we resist change, then we may end up being stuck to those old timelines. We may also end up being stuck to old approaches on the things that we do. So we are now facing virtually a digitally driven business model. And that is where everyone needs to then align, because the true north has indeed shifted. The true north has shifted to be digitally aligned. So innovation, as you all observe, has indeed assaulted traditional business models. Now we are looking at improved performances. We are looking at improved customer reach platforms and the like. We are looking at digital advances in analytics, mobility, social media, and smart embedded devices, because everybody is working with almost their bank account is on their hand, at the palm of their hands. Their pension account is at the palm of their hands. It's no longer a case of a record or a file kept somewhere in the house or something like that. Everything is just tangible right here and within reach. And if we are able to do that, then of course we'll also go back and redefine our value propositions and position them to align with what we see today. So we expect to see increasing lifespans because people's lifestyles are also changing in a way. Because I was talking to a few people who are saying that amongst the things that COVID-19 helped them to do during this pandemic period is to pick up some of the lost, more forgotten hobbies. Yes? I've seen people who used to do only one sit-up in the morning when they're waking up, yes? Now taking up sports and activities and things like those ones. And indeed, those are meant to improve our lives. So with that engagement, the other cost savings around it, as you do your cost leadership analysis, you realize that even things like medical costs for the organization are going down because people are active at the moment. So lifetime employment currently, and this is seen amongst the millennials, is no longer a viable opportunity. Those who may have had the privilege to read an article I did yesterday in the Business Daily will confirm that highlighting the way the millennials are taking things currently, would realize that if we still approach them with the same carrots we used to dangle before, definitely we have lost them and we are not resonating with their current needs. So the fundamental rules of pension schemes are under threat when we have a regulation that says pay the member within 30 days, yes? A time will come when it is actually you forward your claim form in the morning, by afternoon you have your money, is it? So at the end of the day, what will you be doing for the rest of the 30 days to be able to then say you are complying with regulation? So what we envision is that regulation will also play catch up with technology if we're able to embrace that first of all as an industry. So second thing again would be the improved processes and within decision making. As we migrate to infrastructure on demand, we'll be moving and shifting ourselves from where we used to pay for what we hold, what we own, what we have. And that will therefore then move for us to then now just pay for the services for what we are using. And what that means is that if you want to expand in the initial realm, what would happen is that you need to actually offload the entire ICT infrastructure and bring in new servers, for example, that then would be able to have the capacity to move you to the next stage. So increased scalability will be an advantage in this, and a decreased labor as we also embrace lean workforces. Then the use of inbound and outbound micro-targeted marketing techniques and analytics will also help us improve the demand-driven communication with participants, because we'll then resonate with where they are, what they are doing, what is attractive to them. We'll find ourselves in the same space. As we leverage mobile apps, again, we will also gain the opportunity to process transactions faster, no paperwork and the like. And I want to commend the way the industry was able to at least move very fast on this and accept things like digital application forms and claim forms and the like, and then we reduce on paperwork. It is also a saving also within the schemes, which then translates to a benefit to members in the distribution of investment income. So when we also have a digital dashboard, again, you'll be looking at all pension in one place. As we explore the concept of gamification, then within that, as they are excited around, especially the millennials, around playing games, but they are pension aligned games, you know, so that when people are there and they are buying ABCD, buying so many things, even within that platform, one of the things they can be able to score on is actually an opportunity to think about retirement and also save and plan for their retirement. And with such technology, then you can say, what would happen without even involving the actuary, without involving the administrator? There is an embedded calculator there that will be able to tell you, what if I topped up my additional voluntary contributions by this much? What does it translate to at the end of everything? So when you simulate all that, then you're able to see what the big picture holds for you. Then there is also increased efficiency. On increased efficiency, there's information sharing through partnerships with agencies. And here, even including those agencies, they'll be assisted to help drive inefficiencies out of existing biodata. Because, and we see even our government, like in Kenya, is already at the forefront, where they're saying that a time will come when if you approach this government office and you provided your identification card, you do not need to again photocopy and carrying it when you're going to access a similar service on the other end. So when there's that information sharing and all that, then it helps remove those inefficiencies where you find that you're the same member, same company. Here you are a member of the pension scheme, and you submitted an ID, identification card. You gave your KRA PIN, for example, like in Kenya, for tax purposes. Then when you turn around again, you ask the same documents for a similar and almost similar service again, maybe in group life and all that. So when we are able to also accelerate away from those high-touch transactions which are face-to-face, then it means, like today I am here, I know I'm talking to us who are seated in this room. We are also talking to people as far as South Africa. So things like member education and the like definitely will therefore then be very, very easy, but it requires us to be able to embrace the shift that we are currently faced with. So improved access will be a reality, availability will be a reality, data consumption of highly personalized information in the past now will be something that can be shared across different functions, and data will be gold. So you as an administrator or you as the manager of the fund, then you will be able to mine it and use it in any other way that you'd want to do, of course, within the provisions of the protection of the members' interests. Number 4 would be educate members for better retirement planning. Here, again, is following them wherever they are going. They carry their phones, they have their mobile apps with them. We have chatbots that someone can even respond to. at night, you know. The chatbot will respond to a query because it may be night here, but it is not night in the other part of the globe. So at that particular point, it means the same way that other client on the other end expects prompt feedback is the same way you'd also expect to attend to whatever they may query. And chatbots are there now being embraced also within our space, and that is great. So this will help drive deeper member education, which will then fuse all those frequent asked questions with personal data, as we also give them an opportunity to ask simulative questions. Then the use of social media will also be there. Develop micro-targeted education campaigns, help all stakeholders to explore value in their retirement plan, so that retirement is not presented as a deferred gain, something that will come later on in the future, but we are able to see it is part of life today as I progress and as I advance in age towards retirement. So if you're then thinking about what adjustments do you do in your space, because I asked earlier that as I make this presentation, you quickly do a cross-check on where you are, what are you doing, what have you already onboarded, what are you already doing, what have you already embedded as well, and then you ask yourself. So if that's what you're looking at now, then I would urge you to look at something that will help you be able to scale and maintain the same quality of relationships as you move on. You know, retirement is about understanding the member needs, understanding the member expectations, and an ability to be able to then act in a manner that will then support them realize their dreams as you move on. So then you are able to sustain service delivery at that high quality, high standard, even if your scheme membership or total catchment in terms of membership will move to millions and millions of individual data points and the like. Then the other second thing, again, you need to look at is it able to offer you a design for analytics? This will help you improve on internal processes. This will help you be able to detect in advance and even prevent issues to do with fraud, because the more we onboard into that space, there are also others who are looking at it as an opportunity that now they have more people to try and hack. So if we just go in there and you're not going there in a protected mode, then definitely we will be risking the funds that members have entrusted on us as their fiduciary agents within our space. Then you'll also be able to inform dynamic policy, because there are certain things that now data speaks. It will tell you certain things that had not been envisioned earlier on, and then we'll be able to then customize that and be able to offer targeted solutions and services to members. The third thing would be, can it allow seamless collaboration? Convergence of social institutions initially was seen as just a trend, but currently it is now becoming a necessity. And the example I gave earlier on around what's happening in the Kenyan space around the Huduma services, then you realize that you are now able to link this service and this service and this government office and the like, all of them, and they have one view of you as a client or as a citizen. So embedding collaboration into agency processes and across governments is great, and that will help improve efficiencies and also create better service delivery to members. Number 4 that you can also ask yourself around those initiatives is, can it give me active defense? If it can, then that's great, because cyber attacks will not be a worry to you. That's a threat to almost every other person or every other entity that's going into that space. And such disruption of public pension, for example, if you're managing a public pension or a social security fund, then that can be very, very catastrophic and very, very costly in case one was able to hack into that. And then are you able to then again offer a space to be able to expand beyond just the cloud being hosted on cloud? So you're saying cloud now is a de facto part of IT infrastructure, yes, but in addition to that, you need something that will be able to help you position to routinely integrate cloud applications, even as technology keeps on advancing. Now on to the next second part of my presentation. This is now to try and explore, look at the drivers of change and the product innovation opportunities that then the future holds for us. The globe definitely is changing, and it's changing on different spaces. There's the rise of emerging markets that are there. There is the power of disruptive technologies. There is the aging of the global population, the integration of the world as a whole, and the return of geopolitics. As this happened within that particular space, again, key to us in this room today, and I speak from the point of an administrator, is the fact that the global population is indeed aging. And if you look at certain projections, let me pick this one where analyzing things or how things would be by the year 2050 is that the proportion of the world's population over age 65 will have doubled. If we don't encourage them to save, we don't encourage them to look at something that will sustain them in that particular age, then that over-dependency on government, over-dependency on their kins will also be very, very great. We'll also grow with it. And that is a big risk because it will definitely throw many people into despair as well as exposure to old age poverty. So for the first time in history, there will be more people over the age of 65 than those who are under the age of 14. Why? Because you turn left, you are told family plan, is it? You turn right, again, family plan. By the time you're calling people for the third baby shower, yes, they're also looking at you like, aren't you doing it too much now, you know? Yeah, so those things are there, they are realities and the like. And the number of people worldwide aged 80 or older will also quadruple to over 400 million. 80% of people 65 or older will live in low or middle income countries. Then in Italy, Japan, and Spain, 1 in 3 people is expected to be 65 or older. And of course, there are already economies that are struggling with this reality that some of us see like it is a 2050 conversation. So the drivers of change in terms of product innovation and opportunities are also there. One of the chances that are there, which we need to be very, very keen to observe, is the commoditization. And this is the constant pressure to drive prices and margins lower. It happens a lot, you know, in everywhere. In the industry, you're talking about undercutting here and there. Every time one of your clients goes on tender, you just know that even if you win them back, you'll be winning them back, but at a discounted rate, you know. So all those things are happening. It's a threat to the industry and also a threat to service delivery because it may push us to then also try and minimize on the expenditures to just continue remaining afloat and the like. So those things are there. Second, again, is the digital revolution. Here, new technologies are leveling the playing field by giving even small companies access to opportunities that were beyond them at some point. So now you may be here before you realize you're in the same room pitching with a colleague from Zimbabwe, for example, for the same account, you know. Earlier on, you thought maybe it was just concentrated on the few that are registered within your jurisdiction. But as this continues, these opportunities continue to open up, then you'll realize that at the end of the day, the entire globe is transforming into just one simple digital society. Then social media, the platforms will make it possible for people anywhere in the world to instantly connect, share information, and create communities. So what that means again is whatever you do in a different jurisdiction, if it is uncouth against the law, malpractices and the like, before you know it, you will be everywhere. And every brand you are affiliated to and the like will definitely suffer the blow of what's happening there. So even good governance, challenges that are there are that as you check and look at how your operations are within a particular jurisdiction, then you are also able to say, we are safe in Kenya, so we are also safe, or the entity that is affiliated to us in a given country is also safe because of the risk of reputational damage. Then globalization is also there. Competitors can now come from anywhere in the world, no matter the product, market, or industry. You will now be lining up so many of us to be able to offer that service to a given clientele. Then increasingly turbulent world, we live in an unsettled world of economic upheavals, territorial and religious disputes are there, shifting demographics, and a very rapid rate of change. So with that, ladies and gentlemen, I'll end my presentation there. I hope I have been able to excite us to look at this dark cloud called COVID-19 in a different way. As we trace around the silver lining of that dark cloud, the saying is true that every dark cloud has a silver lining. I believe there's something that you may have picked as I was doing my presentation. Thank you very much.
Okay, do we have any questions for George? Questions? Can you introduce yourself?
Thank you, Presenter. I have two questions that I want your attention. Sorry, my name is Farah, I'm from Zimbabwe. The first one pertains to the issue raised regarding leveraging on mobile apps as a way of technological advancement. Right. The question here is, how then do you look at the risk that is likely to come after 20 years, given that we are paying using a mobile money network and clients can come back after 20 years to reclaim benefits? How then you as a pension fund reduce or minimize the risk of repaying somebody who you paid earlier? The second question is on the chatbots. A quick check on the Harvard Business Review, for example, 2007, shows that it's not always effective. There's a need for scope on following up with verbal communications, and sometimes it requires even more resources to attain successfully 100% to the queries raised by the clients on the chat rooms. Thank you.
Can I take that first? Okay. Yeah, thank you very much for those questions. Indeed, one of the questions throws us into the future in terms of security. And this is how will we be able to manage risks as we embed mobile apps and the like as we move on. Now, we are transitioning from what we used to do was we would hold physical records, is it? And then we back it up online. Yes? There is a shift now that now you're holding digital records, but you're backing them physically. Yeah, so what would happen is that if you are able to address the issue of data backup, yes? If you're able to address the issue of record keeping, then you'll enable your organization or entity to be able to allow data to remain alive for a given period of time. I know there are jurisdictions that have even legislated the same to say that you cannot destroy records before, let's say, a period of around 7 years or so, is it? So all that is there. So backup would be key to be able to say cross-checking. And you know, if someone comes and claims that they were not paid, but they were paid, one of the things that we know is best kept is anything that is stored online. You know, the way they say social media does not forget, is it? What you do 10 years ago, what you did 10 years ago can actually come to haunt you today. So if we leverage on that as a strength, then we are saying we can actually pinpoint even where you are geographically when you are accessing your benefit using your mobile app, and then prove all that. Then the challenge on the chatbot may not promise complete resolution of whatever a query may come on board. but it just serves as a very, very good holding. Yes, a holding interaction as your way to sort everything. Because yes, we have computerized everything. We may even bring all those machine learnings and the like, but at the end of the day, we may not completely eliminate the human being behind the scenes, is it? Yeah, so the agreement there would be that a holding, because people get very impatient, and with this generation that wants everything instant, yeah, the younger population, they want everything instant. It means that if they are to prompt your app, for example, they don't need to wait for 6-7 hours until tomorrow when people report to the office to receive even an acknowledgement that we have received your email, you know. So such things, just engagement, because that interaction is what people would want to have, and get those touch points to be able to allow them to get some holding response as your way to sort everything out.
Do you have another question? Okay.
Thank you. My name is Jonathan. I'm from Zimbabwe. First of all, I would like to commend the presenter for a very lucid presentation that has highlighted a number of areas where adjustments are either happening, whether we like them or not, or will have to happen. So as, you know, for us to take advantage of a situation that was supposed to disadvantage us, COVID-19. I concur with the observation that one of the changes, beneficial changes that has come, is our more rapid embrace of technology and of methods that are not analog, that are more digital. And that information that is based on real-time data is now readily available to customers, making for greater efficiency, and perhaps also posing new challenges for service delivery as well as for regulators. My question is about how you see the pace harmonizing between what the industry may wish to do in terms of embracing paperless transactions and what the legal courts of law will be doing, or hopefully will be doing, to also embrace the same concept. In other words, when it comes to evidence being produced, it is essential that a digital signature should be valid in a court of law. So how do you see that, you know, the pace, the relative pace between the embracing of digital methods by the industry and the embrace or the adoption of the same by courts of law? Thank you.
Okay, last one. Let me take this one, George.
All right, thank you. My name is Matthew Chavara. Thank you for the insightful presentation. My concern is that with these digital technologies, devices, and media have brought us great benefits and offer enormous opportunities, but their use also exposes us to significant risks. In your presentation, you didn't talk about how we're going to manage the risk and seizing the opportunities. For instance, when you talk of cyber security and also on the artificial intelligence, which I foresee most of the jobs will be taken away because we have some automation, which is also coming the post-COVID-19. I want also just to maybe, if you can shed more light on that. I thank you.
Thank you, Matthew. Let me start with a question from Jonathan, and thank you for those great remarks. How do we see the pace harmonizing? There are certain factors that would then dictate how fast we are able to turn and face this true north that I am proposing to us. And part of it is the fact that ICT infrastructure calls for huge capital provisions. That is number one. And then number two, again, is the fact that the clients we may want to serve may not appreciate it at the moment, but they'll come to realize it later on. Because I remember when even banks actually allowed people to withdraw monies from their mobile phones, yes, others would still insist that I have to go all the way and queue at the counter because I need somewhere I can sign, you see. But how do we then counter that? We counter that through education. If we are able to educate, we are able to carry them along with us during the journey, then they'll be able to appreciate as we move on. And you even saw, like in our jurisdiction here, when Safaricom, one of our mobile service providers, began that, the first people up in arms were actually the banks, yeah, to say that no. But then when they realized that this is not a competitor, but actually has come in to complement the services we offer, now one of their marketing lines is what? We provide mobile banking, you see. So that happens, and that may actually help us determine the pace so that we're able to educate our clients, we're able to carry them along as we do those technological advances and any adjustments that we do. There was a question also around how fast the law or the legislative framework can actually also allow us to embrace this. And here, it's a matter of having a common voice, because if you are doing it and I am doing it and this person, other person is doing it and we are in the same space, then what that gives us is an opportunity to have a voice to be able to influence policy reviews. And when you have a chance to influence policy reviews, then at the end of the day, the law will just have to catch up, is it? Yeah, because we've seen currently now in other quarters, they are now acknowledging a digital signature. You know, it's already happening. So if that is now valid, then it means that as we continue presenting that, hey, even this is a way to go, we're able to confirm it is secure, it is, you know, and all those other risks that may be there, because that is what makes the law turn slowly. They are a bit risk averse, you know. We are not quick to legislate something if we do not know exactly how it will pan out at the end of the period. But as policy makers, your voice, my voice, our voice will be able to guide us on the way forward. And then my colleague Matthew raised, Matthew, I got the name right, yeah? Yeah, raised a very good question. And I'm happy that you have a heart for people when you talked about the risk of job losses and the like, is it? Yeah, so what I would say is this, that at the end of the day, when we were growing up, we all would sing the common phrases of, when I grow up, I would like to be a doctor, is it? Yeah? An engineer, If you look at the list of the professions we knew, I think administrator was nowhere there. When you were growing up, being an administrator was nowhere there, is it? Being a data analyst was nowhere there. Yes? So what we are saying is, as this space opens up, yes, some people have also discovered that, by the way, the voice I have can host people in a Zoom platform and they can pay something, you know? So opportunities are also coming. So we may not say we are just closing doors and our focus is not just on jobs. And by the way, the generation where I was talking about, the millennials, that is their least concern. You talk to them about, we'll give you a job, permanent and pensionable, and the like, they ask you, excuse me, what exactly is that? I just want to learn the trade tomorrow. I want to innovate something, you know, and then they move on. So even job longevity at the moment is not a reality. Even some of us who sit here, we think you're permanent and pensionable. The future of your employment contract is as short as the notice period. There is no permanent and no pensionable. And we got away from the DB schemes that would reward us for long service, is it? Today you are rewarded for what you put in. True. Yeah, so increase our income streams, be a bit open with this, and be able to do that. But at the same time, the infrastructure investments comes with a keen eye on the risk exposures around all these moves. Thank you.
Thanks for the very insightful presentation. Maybe you can speak to us just briefly on post-COVID. How do you see investments in terms of investment? Because we know the main objective of the pension scheme is to ensure that people live a better life. So my question would be, how will the investment phase be like? As a trustee, I'm normally involved in the preparation of investment policy statement. We sit in strategy and investment committees. But the underlying issue now would be, what is the phase of investments going forward?
Thank you. I didn't get your name.
My name is Kolil.
Korean.
Kolil.
Kolil.
Yep.
Thank you. Thank you for that question. Now, talking of investments, and of course, looking back to the impact that COVID has had on the traditional assets that we've always held, definitely the story is not rosy, you know? The story is not rosy. And maybe it's a high time for us to then assess and ask ourselves whether the way we've boxed ourselves into the thin lane of asset classes that we are holding currently or proposing pension schemes to invest in, whether it really makes sense, you know. Because the challenge has been, and that is what made us run away from the defined benefit schemes, that one of the things that would always fall short of the projections would be the targeted investment income. Why? Because we have boxed ourselves to a very narrow path of the assets that a pension scheme can invest in. So we're looking at two broad categories. We're looking at interest-bearing assets. We're also looking at equities, yes? So the space around how many new equity counters do we see evolving? Again, very minimal, is it? When you look at turn to safety towards interest-bearing assets again, then you're also looking at environments where even the same government is actually competing with the same citizens, you know, yeah? Like it is for us here in Kenya. On one end, you're saying we are doing interest capping, yes? And as you have capped on interest, you are now setting the lenders into a free space to just push all the money towards you and away from every other investment vehicle that they may have actually looked at. Why? Because you're also offering a very attractive rate. So why would someone then give the money to you who comes with a loaded bag of risks, is it? As opposed to give it to the government who appears to be safe. So you're capping on this side, but opening another route that then allows you to compete with your own citizens. My challenge to us here would be that if we could have a voice and have an open mind that can embrace the opportunities that are coming by and say, we have private equity funds that are coming, you know, they're investing in things that if you are in a traditional space, you would actually not even visualize. Yes. Yeah. So are we able to embrace that? And the way we are doing is we are opening a very small crack saying you can only invest in equity, private equity, for example, 5 or 10%. Yes. What impact will that have? What if we assessed rightly, this is our population, this is the age liability structure, and then we said we have an appetite to be able to see this thing going forward and the like. So the space is evolving. Like in our country here, Kenya, there was the rollout of derivatives, is it? If you look at it, it can work efficiently, and it should actually work efficiently within the digital space. So at the comfort of your phone, you can take positions, you know, on derivative trading. But at the end of the day, what are we saying? When you come back to even the policy statements and the like, and the actuaries in the house, I hope you're also listening, that when we prepare those investment policy statements, we tend to also box the scheme, yes, towards certain assets only. And let's open up the space and say, hey, there's so much, even this digital platform coming up with, we have so many IT firms and the like that are setting up and the like. If you believe in the concept, it is worth taking a position in. Then we expand that scope so that the traditional asset classes we've been operating over many, many years since I joined even the industry, the change in that space has not been major. Maybe we could open up a bit. But as you said, the impact of COVID, because of what we've been used to doing, has not been very, very good. Though our market here in Kenya has been a bit resilient, which again is a plus.